What's up, everybody? This is Sunko, the Korean bro. Today is 2023, July 5th, and let's look at stock market. Okay, three top stocks to buy now and hold forever. Neo's business bounces back, but there's a better way to play Chinese EV stocks. A roaring bull market is coming. Two magnificent growth stocks to buy now and hold forever. Hmm. Okay. Let's start with this one. Three top stocks to buy now and hold forever. These exceptional enterprises could form the foundation of your diversified investment portfolio. Intuitive Surgical. The shift to robot assisted procedures is likely to be one of the most lucrative in all of healthcare. That's great news for Intuitive Surgical, the global leader in robotic surgery solutions. Intuitive's Da Vinci surgical system is the gold standard in minimally invasive surgery. The system is designed to enhance the surgeon's capabilities with 3D high definition views and precision boosting tremor filtration technology. Intuitive has already reached critical mass. Hospitals have purchased more than 7,700 Da Vinci systems. More than 60,000 surgeons are trained on them. These doctors have conducted more than 12 million surgical procedures with intuitive tools. Together, this represents a tremendous level of investment in intuitive technology on the part of healthcare facilities around the world. Yet, intuitive still accounts for only a small portion of the overall surgical market. Healthcare is a massive industry, and Intuitive has plenty of room to expand into new procedures. For a recent example, in April, Intuitive received Food and Drug Administration clearance for its Da Vinci SP surgical system for simple prostatitis, a procedure that can help people with enlarged prostates. In part because of the benefits robotic surgery can provide, including less pain for patients during recovery, lower risk of infection, smaller scars, and shorter hospital stays. According to Cleveland Clinic, investors can expect demand for intuitive surgical systems and instruments to grow steadily over time. Apple. Apple is the epitome of buy and hold stock. The tech titan has successfully navigated and often led multiple technological shifts, including the development of the personal computer, smartphone, and wearable devices. Now, Apple is making a major push into the rapidly expanding augmented and virtual reality market with its new Vision Pro headsets. Each new device Apple sells brings another person into its vast ecosystem of products or services. The company has a massive install base of more than 2 billion devices. Moreover, once somebody buys an iPhone, Mac, or other Apple device, that person tends to remain a loyal customer. This situation creates steadily growing demand for a tech giant's ever expanding array of services, which includes popular offerings like Apple Pay, iCloud, and Apple Music. These dynamics also help Apple produce a staggering amount of profit, including $100 billion in 2022 alone. The tech juggernaut passes much of this cash on to its investors by way of dividends and share repurchases, both of which should help to support a rising stock price in the years ahead. Unfortunately, many people choose trade Apple stock based on short-term concerns. Don't make that mistake. Buy and hold this proven winner, and you will have an excellent shot at building lasting wealth. Let's look at a lower and bull markets coming to magnificent growth stocks to buy now and hold forever. HubSpot. HubSpot specializes in customer relationship management software. Its platform comprises productivity applications for marketing, sales, service, and operations teams. It also includes solutions for content management, commerce, and workflow automation. Those tools help businesses build long lasting customer relationships by empowering them to provide delightful experiences at every phase of the customer journey. HubSpot has carved out a meaningful niche in the CRM market by tailoring its products to small and medium sized businesses, an underserved market segment. The company develops most of its software internally to ensure seamless integration rather than relying heavily on acquisitions like Salesforce. HubSpot also employs a freemium pricing model that allows users to try products without paying, then upgrade to higher tier products as their needs evolve and their businesses grow. So what HubSpot is already the gold standard in CRM software for small businesses, but its capacity for innovation should reinforce its leadership in that market segment while also helping the company win larger clients. With that in mind, management says its addressable market will increase from a $45 billion in 2022 to $72 billion by 2027. Okta. Okay, first. Okay. Two magnificent growth stocks to buy now and hold forever. Okta specializes in identity and access management. Identity and access management. A cybersecurity framework that seeks to securely connect the right people to the right applications at the right time. Um, Platform allows administrators to provision employees, contractors, and customers with access to corporate resources. This platform allows administrators provision employees, contractors, and customers with access to corporate resources, and it leans on artificial intelligence to authenticate, provision employees, contractors, and customers with access to corporate resources, and it leans on artificial intelligence to authenticate and authorize those users based on context like device location and behavior. The Okta Identity Cloud is the most comprehensive IAM solution on the market. According to management, it addresses workforce identity and customer identity use cases, and it features the broadest and deepest set of pre-built integrations. Most comprehensive IAM solution on the market, according to management. It addresses workforce identity and customer identity use cases, and it features the broadest and deepest set of pre-built integrations. Those advantages have propelled Okta to the forefront of the IAM industry. Consultancy Gartner has recognized Okta as a leader in access management for 6 consecutive years. So they're their leader, right? Okay. Workforce identity and customer identity use cases. Broadest and deepest set of pre-built integrations. Okta delivered a solid performance in the first quarter. Customers increased by 14% to 18 of 50, and the average customer spent 17% more. In turn, revenue rose 25% to $580 million. And the company reported a record cash from operations of $129 million, up from $90 million the prior year. More importantly, Okta is well positioned to grow its business in the years ahead. Okay, IAM is the foundation of zero trust security, a framework that improves upon traditional parameter based security. By treating every user as a potential threat and every single sign on attempt as a potential breach, zero trust security not only provides better protection, but also streamlines remote and hybrid work. With that in mind, Okta values its addressable market at $80 billion. Intel, JD.com. Okay. Two stocks down 60% and 87% to buy ahead of the new bull market. Wall Street professionals don't all agree on what defines a new bull market. Zscaler consistently beats its revenue targets and increases its forecast despite tough economic conditions. Scalar. Zscaler consistently beat its revenue targets and increases forecast despite tough economic conditions. Wall Street analysts predict Redfin's total revenue will return to a modest growth rate in 2024. Some Wall Street experts believe a new bull market has already started. Okay. Down 60% from its all time high. Cyber risk grow each day for companies that run their operations online using cloud computing. Yes, the cloud helps organizations tie their business together in the digital sphere across borders, connecting departments and reaching customers no matter where they are located. It also facilitates remote work for employees, which allows companies to access the global talent pool. But that remote access also creates vulnerabilities. Zscaler cybersecurity tools are designed to eliminate those vulnerabilities. So, um, as more sophisticated technology appears, um, the more risk we could possibly have. And Zscaler's cybersecurity tools help you hmm, help you to get prepared for it. So remote access creates a lot of vulnerabilities, right? And Zscaler cybersecurity tools help you avoid that danger. Zscaler Zero Trust Technology adds extra layers of verification for those wanting to access the network. It looks at the device being used and the location of the login attempt to determine whether it's the remote worker or a malicious actor. That sounds secure, but it isn't always enough because attackers are constantly growing more sophisticated. Zscaler also secures workloads through the Zero Trust Exchange, which means each employee is only assigned access to the online applications they need to do their jobs. Each employee is only assigned access to the online applications they need to do their jobs. Even if there is a login breach in one segment of the network, a hacker can't gain access to the rest. Artificial intelligence. Okay, let's repeat this one more because it's a bit ambiguous. Okay. Zscaler also secures workloads through a zero trust exchange, which means each employee is only assigned access to the online applications they need to do their jobs. Even if there is a login breach in one segment of the network, a hacker can't gain access to the rest. Artificial intelligence powers all of the security behind the scenes. The zero trust exchange ingests 300 trillion signals into its models and fends off 9 billion attacks on behalf of customers each day, making it the largest security cloud on the world. 300 trillion signals into its models and fends off 9 billion attacks on behalf of customers each day, making it the largest security cloud in the world. Over 6,000 businesses use Zscaler. As the numbers grow, its AI models will have access to more data and become more proficient at protecting customers. And at this point, we get the point that Zscaler also uses AI to train their model. Uh, like I said earlier, they added one more layer on top of what they had before, but it's not always enough. Hackers always try to find a way to, penetrate. So uh, layers on top of layers is not enough. So what we did at the end was train models, hmm, train models using AI, artificial intelligence, and their system, its name is a zero trust exchange. Zscaler stocks down 60% from its all-time high since November 2021, fueled in large part by the broader sell-off in the tech sector. The stock price has bounced 32% this year, mm, signaling the start of what could be a much stronger recovery. Why? Because Zscaler is one of few companies consistently beating its revenue targets and increasing its forecast despite tough economic conditions. It generated $480 million in revenue during fiscal 2023's third quarter, which was up 46% year over year and well above its prior guidance. As a result, the company raised its full year revenue forecast to $1.6 billion, making the third forecast increase in fiscal 2023. The kind of operational performance offers strong hints that Zscaler stock is worth considering for those who anticipate a new bull market. Okay. Raffen and Zscaler. Launch the micro device. We have there you go. The AMD stock is a relatively inexpensive way to ride the AI wave. Microsoft's early lead in AI could become even more pronounced. Okay. The rise in the effectiveness of AI is driving more people, enterprises, and institutions to use services like large language models. A prime example is OpenAI's ChatGPT. Interestingly, this service requires computing power to process the requests from users. That's where companies like Nvidia and advanced micro devices can benefit. Given that Nvidia's stock price soared in response to the increase in demand, AMD might be an excellent way to ride this AI wave. Already, AMD has boosted revenue from $5.3 billion in 2013 to $23.6 billion in 2022. If it can effectively shift the production of its CPUs and GPUs to meet the rising demand from AI, its revenue could rise further still. Additionally, AMD has proven it can run its business with excellent profits at scale. In the above mentioned years, AMD's operating income increased from $85 million to $1.26 billion. It would not surprise me if AMD's profit stayed elevated over the next decade. AMD's competitor Nvidia has gotten the bulk of the credit for benefiting from the jump in demand, perhaps deservedly. Fortunately for investors interested in AMD, the left AMD stock trading at a more reasonable forward price earnings ratio of 26.8. Long-term investors looking to benefit from the rising AI industry could do well with AMD stock. And now let's go over to Microsoft, okay? Microsoft has a clear leadership position in AI. Microsoft stock has already gotten a big boost from an AI this year. It's not hard to see why investors are excited about the stock. The company's $10 billion investment in ChatGPT and DALI creator OpenAI has given it a substantial stake in one of the hottest names in AI. And the software giant's internal artificial intelligence initiatives stand to help payoffs across a variety of business segments. With market capitalization of roughly $2.5 trillion, Microsoft already stands as the world's second largest company. While the tech leader's already massive size suggests that there are other players in the AI space that will likely be able to deliver more expensive stock returns. Few businesses can claim to have a stronger position in AI. Crucially, the stage could be set for Microsoft's early leadership in artificial intelligence to become even more pronounced from here on out. Between its cloud services, operating system, productivity software, and other business units, Microsoft has a range of product and service offerings that are on track to see significant benefits from the implementation of AI. These services will also generate huge amounts of data that the company will be able to use to feed into and improve AI models. Microsoft has a range of product and service offerings that are on track to see significant benefits from the implementation of AI. These services will also generate huge amounts of data. Microsoft is already one of the world's biggest companies and has an impressive stock performance across this year's trading. The software giant's substantial competitive advantage makes it a worthwhile buy and hold play for investors looking to benefit from the AI revolution. Okay, today what we are going to look at is Palo Alto Networks. Palo Alto Networks. Okay, research firm McKinsey and Company predicts 70% of companies will use artificial intelligence by 2030. Its reports predicts AI will add $13 trillion to global economic output thanks to increasing productivity. McKinsey says early adopters of AI will reap the greatest financial rewards. Hmm. And two companies already have a head start. Might separate the winners from the losers in the corporate world. Palo Alto Networks recently claimed it's the largest AI-based cybersecurity company, and it may be right. Hmm. Certainly has one of the largest product portfolios in the entire industry, and given that its stock currently trades at an all-time high, its market valuation of $73 billion dwarfs all of its competitors too. The company has three areas of specialization: cloud security, network security, and security operation. It's working to integrate AI across them all. Data is king when it comes to training AI, so cybersecurity companies with a large customer base fending off attacks in their ecosystems tend to have the most potential to produce accurate models. Palo Alto Management says the company's network security tools analyze 750 million data points each day and detect 1.5 million unique attacks that have never been seen before through that process. Overall, with its AI models, blocks a whopping 8.6 billion attacks on behalf of customers every single day. Using AI powered tools to fight cyber threats is increasingly important because, as Sentinel One recently noted, malicious actors have started using AI as well to launch sophisticated attacks. Okay, even hackers use AI to come up with sophisticated method. Thanks in part to its leadership in AI, Palo Alto is a cybersecurity provider of choice for large organizations. In the recent fiscal 2023 third quarter, the company saw deal volume soar for its top spending customers. Bookings among customers spending at least $10 million per year jumped 136% per year over year, making it the company's fastest growing cohort. Bookings from customers spending at least $5 million rose a more modest 62% year over year. Palo Alto's pipeline of work continues to expand as well. While its revenue increased 24% year over year to $1.7 billion in the third quarter, its remaining performance obligations rose by 35%, topping an all time high of $9.2 billion. Considering RPOs are expected to convert to revenue over time, the result bodes well. Despite the all-time price high in the stock, Wall Street is still incredibly bullish. Of the 42 analysts who follow the stock and are tracked by the Wall Street Journal, not a single one recommends selling, and 76% of them have given the stock the highest possible buy rating. Okay, let's see Salesforce.com. The Salesforce offers leading enterprise software solution for customer relationship management, customer service, marketing automation, and other applications. It was a pioneer in the software as a service model, which allows users to access the platform from anywhere with a web connection, ensures that everyone is using the latest version of its software. Salesforce's growing suite of applications fueled by internal development and external acquisitions all benefit from integration with one another. When Salesforce sells a company on one solution, it often gets them to take multiple solutions, increasing revenue and margins. It also makes customers less likely to churn. Churn has steadily declined over the years. Revenue attrition fell to record lows in 2022, but Salesforce is experiencing headwinds in 2022 from negative changes in foreign exchange rates and economic uncertainty. As a result, it's taken longer than expected for it to close deals. And its revenue has been pressured, leading management to lower its outlook for the full year and investors to sell off the stock. But the long term outlook for Salesforce remains strong. Management expects its market to grow by a rate of 13% annually through 2025. It has the advantage of a strong network effect resulting in strong customer retention and cross sales, which should allow it to increase revenue faster than the market. Consequently, investors should expect its EV to revenue ratio to climb closer to its 5-year median of around 8.7. Okay, next. Salesforce.com is a leader in cloud based customer relationship application for sales, marketing, and more. As more business shift to digital and omni-channel customer relationships, Salesforce software service plays an important role in helping businesses of all sizes. Sales continues to grow at a double-digit rate. Salesforce grew revenue by 11% year over year in the first quarter of fiscal 2024 that ended April 30 and expects revenue to grow by 10% for the full year. The company generated plenty of cash flow, which allows it to buy back billions of dollars worth of its own shares. Salesforce leading customer relationship management software is supported by very high switching cost. Few managers will risk changing from a market-leading software solution they work fine for an unproven product requiring setup and training expenses. Salesforce operates four software suites that it can across sell to existing customers that has fueled the revenue growth and more importantly its margin expansion in recent years. With this scenario, the company ought to continue producing strong growth for years to come. Okay, buying great companies with linear sales is a surefire way to build wealth. Okay. After a brutal market correction last year, sales shares of the leading customer relationship management platform have rebounded 60% in the first half of 2023. Salesforce provides software applications that allow employees to work more efficiently. Software applications allow employees to work more efficiently, manage sales leads, and make better business decisions. Investors were looking at the bargain opportunity when the stock fell with the broader market over macroeconomic uncertainty. Some of the drop might have looked justified to Wall Street since Salesforce was reporting strong revenue growth on top of weak profitability. But given management focus on growing free cash flow, the long-term opportunity in the CRM market, the stock is still a solid buy, even at these hard share prices. The CRM market is expected to grow 12% per year to reach $157 billion by 2030, according to Fortune Business Insights. Consistent with that forecast, Salesforce has been growing at high rates for many years. The size of the opportunity ahead should already complement to sustain double-digit revenue growth, especially as it rolls out new features powered by artificial intelligence. Salesforce is introducing AI capabilities through its Einstein AI platform. Einstein processes large amount of data to deliver insights that business can use to grow sales and boost performance. The company is looking to infuse generative AI capabilities across its various applications, which could boost demand for Salesforce software in the years to come. Prospects for growing revenue over the next decade look solid. And Salesforce sweetens the pot for investors by showing it can also improve margins. Management raised its full year adjusted operating margin guidance to 28% in the most recent earnings report, with stock trading at a price sales ratio of 6.6 below its 10-year average. The market could be significantly undervaluing the company's future growth. Okay, this is it for today, and bye bye, everybody.